Hi, we want to give you a recap of what happened in 2020 and what we see happening in 2021. Now, when we did this video, the S&P 500 was up 16%, the Dow Jones was up 8%, the NASDAQ was up 40%, and technology stocks were leading the way, or led the way all year, and energy stocks were the laggards. Now, the bullish percent is showing, and this is the New York Stock Exchange bullish percent, that the market is at above 70, which means it's overbought. Now, that means we're still positive on the market, but we could see a short-term downturn in the market. And so you kind of need to be prepared for that short term, but long run, we think the market will continue to be positive. The next slide is the high-low slide, which has existed since 1980. And what you'll see is that the number is over 98 or at 98 right now. And this is unusual time because it's only happened 8 times since 1980. And in each case, within the next 12 months, the market has gone up an average of 19% after that. So there's a good possibility that we'll see double-digit return in 2021 based on this chart. Now, there's some other things that we think that will lead to an upward market, and one is what's going on in technology. And what you'll see in this chart that we got from our friends at ARK Investment, that the amount of money that is being spent and the amount of development being done in technology is at all-time highs, certainly much higher than the S&P 5 or the computers and the internet when they came out. And we expect that to continue to lead to large growth going forward. Unemployment right now sits at 6.5%, which seems high, but if you go back to when Ronald Reagan was president, his average was about 6.5 and his all-time low was 5.2 in that period. So we're basically in a healthy area, and if we go down to 4.5%, the Federal Reserve sees that as basically being fully employed. Now you add in the Fed having interest rates near 0%, and the PPP loan and all the stimulus coming from Congress, and that leads to a huge growth in the money supply. And in fact, the M2 money supply has gone up by over 25%. And usually a big growth in money supply means a big return on the stock market and the economy in general. Now, there are some downsides to this. One of them is inflation, and we will probably see an increase in inflation. And we'll also see, and we're seeing it right now, a devaluation in the dollar. And finally, that's going to be really hard on retirees who need to use traditional fixed income investments to pay for their retirement. CDs and treasury bills will not be paying the kind of money that they've seen in the past. But overall, we at Charney Investment Group see a strong bull market going into 2021. Now, add into that, we also see the emerging markets doing well. And that's due to the fall in the dollar. Specifically, the Pacific Rim countries is where we see the most growth. Now, our final graph that we're showing you is from the Dolly, and what it shows is domestic equities are still the #1 place to be invested in and have been for quite some time. But earlier in the year, international stocks were negative, and now they're in the positives. And we see them being a good place to invest money also. And then third is fixed income, although we don't care for fixed income as much as we like domestic equities, both large, mid-cap, and small cap, and international. Now, this past year has been a very difficult year, but as a recap, we see growth stocks being the leader, and we see international stocks being a good place to be invested, and we think 2021 will be a very good year for the stock market. Now, if you have friends who are worried or concerned about what's happening in the current situation, please send them our way. We'd be glad to talk to them and kind of tell them what we see happening in the market and help them through getting through this very difficult time. Until next time, thanks.